Welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one clear idea at a time. Today we're exploring an expert advisor called Detrended Cycle Pullback. It's built around a classic tool known as the Detrended Price Oscillator, and it follows a pro-trend, pullback style of trading. Over the next several minutes, you'll learn how the strategy reads market cycles, how it decides to enter in the direction of the trend, and how it manages its stop loss and take profit. This is educational information only, so let's dig in together. So what exactly does this expert advisor do? At its heart, the Detrended Cycle Pullback strategy is a pro-trend, pullback system. That means it doesn't try to pick tops and bottoms against the market. Instead, it waits for a short-term dip inside an existing uptrend or a short-term bounce inside an existing downtrend, and then it looks to join the move as the trend resumes. The engine behind it is the Detrended Price Oscillator, often shortened to DPO. This is a classic tool that strips the broad trend out of price. It does this by subtracting a moving average, shifted into the past, from the current close. When you remove the trend, what's left is a cleaner, wave-like oscillation that swings above and below a central zero line. Deep dips below zero mark cyclical troughs, and deep peaks above zero mark cyclical highs. To decide which direction it's allowed to trade, the strategy uses a slow trend filter, a 100-period exponential moving average by default. Price above that average is treated as an uptrend, and price below it as a downtrend. The strategy also adapts to volatility. Rather than using a fixed distance to define a deep swing, it scales that band using the average true range, or ATR. When the market is calm, the band tightens, and when the market is active, the band widens automatically. Who is this style suited for, in an educational sense? It's designed for traders who prefer trend-following logic with disciplined, rule-based entries, and who want their stops and targets defined by measured volatility rather than guesswork. As always, remember that trading carries risk, and losses are a normal part of any approach. This video is for education only. Let's walk through exactly how the strategy makes its decisions, step by step. Everything happens once per completed bar, so the expert advisor waits for each candle to close before it evaluates anything. First, the trend filter. The strategy reads the slow exponential moving average and compares it to the current closing price. If price is above the average, only long ideas are considered. If price is below the average, only short ideas are considered. This single rule keeps every trade aligned with the higher level direction. Second, the Detrended Price Oscillator. The strategy calculates a simple moving average of closing prices, then shifts it backward in time by roughly half its length plus 1 bar. Subtracting that displaced average from the current close produces the DPO value. It computes this for both the current bar and the previous bar, so it can see which way the oscillation is turning. Third, the volatility band. The strategy multiplies the average true range by the band multiplier, which is 0.75 by default. This creates an upper band and a lower band around the oscillator's zero line. Only swings that reach beyond these bands are considered deep enough to matter. Now the entries. For a long, 3 things must line up. Price is above the trend average. The previous DPO reading was at or below the lower band, marking a cyclical trough, and the current DPO reading has turned back up. When all 3 agree, the strategy signals a buy as the dip gives way to renewed strength. For a short, the mirror image applies. Price is below the trend average. The previous DPO reading was at or above the upper band, marking a cyclical peak, and the current reading has turned back down. That signals a sell as the bounce fades. Once a position is open, risk is handled entirely by measured volatility. The stop loss is placed a set number of ATRs away from entry, 1.5 by default, and the take profit is placed further out, 2.5 ATRs away. That produces a reward-to-risk structure of roughly 1 to 1.67. Finally, position management. After price advances by 1 R, meaning 1 unit of the initial risk, the stop is moved to break even to protect the trade. From there, an ATR-based trailing stop follows price at a distance of 2 ATRs, tightening only in the favorable direction. The strategy holds just 1 position at a time. Let's look at the actual MetaTrader 5 code on screen, just as you'd see it in MetaEditor. At the top are the input parameters. DpoPeriod sets the length of the Detrended Oscillator's moving average, defaulting to 20. TrendEmaPeriod is the slow trend filter, 100 by default. ATR period controls the volatility reading. BandAtrMult at 0.75 scales the oscillator bands, while SLATR and TPTR at 1.5 and 2.5 set the stop loss and take profit distances in ATR multiples. TraiLATR and break-even R govern the trailing logic, and LOTS fixes the trade size. Below the inputs, the strategy first calculates the band by multiplying the band multiplier by the current ATR. Then look at the long block. The condition reads, close is greater than the trend EMA. The previous DPO was at or below minus the band, and the current DPO is greater than the previous one. In plain English, we're in an uptrend, the oscillator dipped into a trough, and it's now turning up. When that's true, the code reads the ask price, sets the stop loss 1.5 ATRs below, sets the take profit 2.5 ATRs above, and calls trade.buy. The short block is the exact mirror. Close is below the trend EMA. The previous DPO was at or above the positive band, and the current DPO is less than the previous one. That's a downtrend with the oscillator peaking and rolling over. The code then reads the bid price, places the stop loss 1.5 ATRs above, the take profit 2.5 ATRs below, and calls trade.sell. Clean, symmetrical, and fully rule-based. Now let's bring it all together on the chart. On the price panel, you can see the candles and the blue trend EMA weaving beneath them. In the lower panel is the Detrended Price Oscillator, swinging around its zero line, with a lower band in green and an upper band in red. Watch how the two panels work together. We begin on the left in an established uptrend. Price is trading above the blue trend EMA, so the strategy is only interested in buying. Look at the first few candles. Price is pulling back, drifting lower for 3 bars in a row. This is the short-term dip the strategy is waiting for. As price falls, follow the oscillator in the lower panel. It slides down and pushes below the green lower band, printing a cyclical trough. That deep reading tells the strategy the pullback has reached a meaningful extreme. Now the key moment. On the next candle, price stops falling and closes higher, and the oscillator hooks back up, rising off its trough. All three conditions are now in agreement. Price is above the trend EMA, the oscillator dipped below the lower band, and it has turned up. This is where the buy entry marker appears. Notice the logic isn't fighting the trend. It's buying the dip precisely as the uptrend looks ready to resume. Once the position is open, the stop loss sits a measured distance below entry at 1.5 ATRs, and the take profit is set further above at 2.5 ATRs. Watch the next candles. Price pushes up, one green candle after another, riding the resumed trend. As it advances, the strategy moves the stop to break even and then trails it upward. Finally, price reaches the take profit target above, and the long trade closes for a gain in this illustration. That's the complete long cycle. Dip, turn, entry, and exit with the trend. Now the market shifts. After that peak, price rolls over and begins to fall, and crucially, it closes below the blue trend EMA. The trend filter has flipped. From here, the strategy will only consider short trades. Watch what happens next. Price stages a short-term bounce back up, a counter-trend rally within the new downtrend. As it rises, the oscillator climbs and pushes above the red upper band, printing a cyclical peak. Just like before, but inverted, the strategy waits for a deep extreme. Then the confirmation arrives. Price stalls and turns lower, closing back below the trend EMA, and the oscillator hooks down off its peak. Now the short conditions align. Price is below the trend EMA, the oscillator rose above the upper band, and it has turned down. The sell entry marker appears here. The strategy is selling the bounce as the downtrend reasserts itself, never trading against the larger direction. With the short open, the stop loss sits a measured distance above the entry, and the take profit is projected below at 2.5 ATRs. Follow the candles down. Price slides lower, bar after bar, and again the stop moves to break even and trails downward as the move develops. Price finally reaches the take profit target below, and the short trade closes in this example. Step back and notice the symmetry. In both cases, the strategy did the same thing. It identified the dominant trend with the EMA, waited for the oscillator to reach a cyclical extreme against that trend, and only entered when the oscillation turned back in the trend's direction. The bands, the stop, and the target all scaled with volatility through the ATR. That is the entire idea of Detrended Cycle Pullback, working in sequence. Of course, not every signal plays out this cleanly, and losses are a natural part of the process. And that brings us to the end of our breakdown of the Detrended Cycle Pullback Expert Advisor. Today we covered what the strategy is, how the Detrended Price Oscillator reveals price cycles, how the slow EMA keeps every trade aligned with the trend, and how ATR-based stops, targets, and trailing logic manage each position. Everything you've seen here is for educational purposes only, and nothing in this video is financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to explore next, and subscribe so you don't miss what's coming. You can find more strategy breakdowns at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.